Hello, everyone. My name is Darren Joseph from HTJ.tax, and we're a team of cross-border tax advisors that seek to demystify the sometimes confusing world of international tax. And today we have the honor and the privilege of having an in-depth conversation with Senor Jose Aguilar-Scheer. Jose, would you like to introduce yourself, please?
Of course. Thanks a lot, Darren, for the opportunity, and obviously happy to chat about the Spanish Texas. So I'm a tax partner in international firm Squire Patton Boggs, based in Spain, in Madrid, Spain, and obviously it was very used to working with international private clients, moving to Spain and planning ahead. So I hope we can make a useful conversation to anyone looking to move to Spain or having cross-border issues.
Fantastic. Appreciate it. What about the asset protection side? What typical structures do you have, or would you recommend, and would you work with your clients in terms of asset protection?
Yes, well, I mean, again, we still find that sometimes, we do see, and especially with Latin Americans and North Americans, they still want to have their asset protected within the U.S. They have Latin American would still want to have some. I mean, I do feel that Spain works in the common market, the European Union. So sometimes you feel, well, if you don't trust Spain, I'd rather have it in Luxembourg and Switzerland. That's still work. There's no issue. We have no limitation assets abroad. I mean, you might have heard that there is an additional reporting for foreign assets. So that's something that's just an additional reporting. But other than that, and as I said, I would be fine working through a trust structure for a pure asset protection, right? Or a succession planning. Again, what I've seen is that, for example, a U.S. person came into, if you do a BVI trust, Cayman Trust, Bermuda Trust, Bahama Trust, that could be seen as a more aggressive, abusive. I think there's ways to explain it. You can be fully transparent, disclose that. That's fine. As I said, U.S. trust would work perfectly. So again, what would we do? We would have full disclosure of the trust. Okay, the trust, I have a trust for succession planning, but for tax purposes, I'm allocating directly the income that I have in the trust. That's fine. I want to set up a blocker entity because I don't want to have the U.S. state tax problem. That's fine. We were going to do the full disclosure of the tax transparent vehicle, and that's fine. And again, I mean, there is full flexibility, and as you said, risk allocation is different for every client. So there's ways that you can accommodate to that. And people, as you said, they trust U.S., they trust Switzerland, they don't trust Spain, they don't trust Latin America, and this changes. Again, that's how we could work around that, and I think that's pretty flexible. We're in a safe environment from a European perspective. As you know, there's a minimum 100,000 protection on any asset within the European Union. Every bank that you have in a deposit is protected within the European Union. So, I mean, sometimes right now in Spain, you have people are putting 100,000 in Spain. They're putting 100,000 in a Lithuanian bank because it has higher yield just because there's a higher risk. But at the end of the day, the European Union is protecting up to 100,000 in any bank around the European Union. So that's where now we have different products that people are investing. Again, weird investments in Lithuania or someplace in Bulgaria because they have a higher yield of investment. So again, the risk is free, right? In a way.
Okay.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.